So I hear you like money. Well, me too. Big money. Some of the biggest money you've ever seen. Today, we talk finance and the economy. Welcome to Leading the Way. Alright guys, so we all know why you're here today, right? It's not just because of my boyish good looks, or the fact that I hobnob with politicians and celebrities. You want to succeed for yourself, financially. And here at Leading the Way, we want to help you with that, right? But in order to succeed, you need to understand your environment so that you can capitalize and destroy. Okay? We're going to show you that one more time, just in case you missed it, right? Your environment's coming at you. You need to capitalize and destroy. Now, this is similar to Miyagi's technique, but we added a little bit of an ending to his traditional wax on, wax off, because frankly, you can't win unless you destroy. So keep practicing at home and make sure nobody's watching, because you don't want to give away any secrets, right? Anyways, today we're going to talk about the economy, okay? We're going to give you some tools so that you can approach the market moving forward. But first, we talk to a legend. He's an investor, an engineer, a full bird colonel in the US Air Force, a business creator in the aerospace defense industry, and has been known to time the market perfectly. Hell, the only reason he came on the show today is because, well, I'm his favorite grandchild. Let's get into it with Jim Waite. Grandpa, thank you so much for coming on the show today. We really appreciate it.
Well, I always enjoy being with you. Of course, you're my favorite grandson. That is when the other 8 are around.
Of course.
But I'm pleased that you've called me.
Of course, yes. And I know you have to say that because we're on camera and everything. But now, I know you're a busy guy, and Grandma's got you on a very tight schedule. So I don't want to take up too much of your time today. Let's get right into the questioning, okay? I've got 3 questions for you today. Question 1. You recently recommended to your daughter, Krista, that she preserve some of her capital and put her 401k into a money market account. Now, this saved her $70,000 when the market crashed back in February. And that's a lot of money. Now, what led you to give her this advice?
Well, David, I watched the market closely and have for years. And frankly, all through the fall, up through Christmas time, I found it overpriced. And I was very concerned about a reduction, a significant reduction.
Okay.
And then when I first saw the signs of the virus in early February, early February, I knew then that things were not well. And I talked with my daughter Krista, and I explained to her my concerns. I really didn't make a recommendation. I just explained to her, I thought, on what she should be thinking about based on all this data that was happening. And she agreed. And then she withdrew her money from her account and put it into the money market.
Okay.
I don't like to make recommendations like that, but I thought if she at least knew the background, she'd be comfortable with it.
Yeah. So you were looking at some data, and based upon some of your experience and what you were seeing with this new virus, you thought it might be a possibility. Something may happen in the market, so you just talked about it and kind of talked about the possibility of something happening.
That's right.
Yeah, okay. Well, that's...
And I told her that, frankly, I told her that I got out, you know, and I gave her all the reasons why I got out.
Right. So you were doing something for yourself, and you were also trying to help other people. And I think that's very powerful. Now, let's get into our second question, okay? So you've been a successful investor over the years, right? And is there something you can tell us about how you approach the market over the years? Is there a golden rule that you like to live by?
Well, David, I've liked to watch the market. Back in the late 90s, when I retired, a good friend of mine helped me make investments because I really didn't know much about the market. I didn't have time to pay much attention. I just put them into mutual funds, and he helped me.
Mm-hmm.
Well, based on that advice, during that period of time, I lost 25–30% of my funds.
Hmm.
And I said to myself, Jim, how about you getting to know a little bit about this marketplace? And so I started doing my research and really went at it wholeheartedly for over a year, just doing the research. And I came up with the knowledge that I needed a good database, and I found one in the Investor's Business Daily.
Right.
It helped me, and it gave me a lot of information. And by the way, that database is over 102 years of data. The fellow who put it together was the first, by the way, in the financial markets to do that, way back. So anyway, I started looking at that, and I learned some rules. I learned rules when to invest, in my view, and when to sell.
Mm.
For example, give you an example. I learned some hard, fast rules. If you buy a stock and it drops 8%, get out.
Okay.
On the other hand, if you've bought a stock and it's gone up 20%, take some profit. You don't have to sell it all, but take some profit, maybe half of it,
Mm-hmm.
so that you've got yourself protected on both ends with some solid rules.
Mm.
And I've watched that over the years, and it's been good to me.
Wow. So you originally started investing with mutual funds and had an advisor, and things didn't go so well. And then you decided to educate yourself and and use data and historical information and a large data set, and then you developed rules to live by. And from what I hear you saying, that sounds very, very pertinent for the times that we're in right now. And
let me add one more, David, just quickly.
Okay.
You know, when you reach my age, you become more protective,
Mm.
and older people should, rather than, you know, getting into the market and really trying to make some money. Look at what you've got, try to protect what you've got, so that you and your wife and family can live out okay.
Yeah. So it's there's different stages in investing, and
That's right.
it's important to understand which stage you're in. If somebody's closer to retirement, maybe they want to protect a little bit more of their capital, and if you're a little bit younger, maybe you can be a little more aggressive. But it's nice to have rules to live by. Okay, so we're going to get to the last question here, because I think this is powerful stuff and the people are going to really enjoy it. So you've been successful in life, right? You've done a lot of things in your life. You've started businesses, you put yourself through college, you did very well in the Air Force. Is there something that you live by? Is there a golden rule to your life? How do you approach the different stages?
That's a tough question, David. I like to think that whenever I reach a crossroad on a particular issue, subject, time to make a decision, always look at the alternative. Take time to examine all of the alternatives, rather than to, you know, somebody says do this or somebody says you should do that. Look at the alternatives, and it's been fairly successful with me. Sometimes I'm criticized for looking too long at alternatives rather than making a decision.
Mm.
But actually, that's been my principle, is examine the alternatives.
Yeah, and what I hear you saying is, you know, life is full of decisions. You're making decisions every day, and
That's right.
it's important to understand, you know, what you're capable of and what are your options. And when you look at your options, things change. And what I hear you saying is, it's good to sit still and learn and look and try to understand the future, so that you can maneuver in a way that is going to ultimately help you. And I think that's really powerful stuff, and I agree with you. So I just want to thank you so much for your time today. I know you're a very busy guy, and we'll catch up with you a little bit later. Okay?
All right, David.
All right.
It's been nice visiting with you.
Same. So, now that you've gotten some of the wisdom, let's get into some of the data. All right? U.S. recession model at 100% confirms downturn is already here. Okay? This was written by 3 different people, and it was updated on the 8th of April. Now, the novel coronavirus has spurred on what will most likely be the worst recession in generations as the U.S. economy grinds to a halt and millions lose their jobs. So they're saying the chance within 12 months is 100% at this point. And they're basing that off a Bloomberg economics model. And now this was created last year to determine America's recession odds, right? And what you can see down here is back in 2008, the model showed 100% back here before our recession, and also in 2001 in the dot-com bubble crash. So we are back to those historic levels, and they're recommending that we'll be entering a recession, which means 2 quarters of negative growth, right? So I just want to show you this model. I thought it was really cool. Now they go on to do a couple more things in this article where they talk about other metrics, unemployment, and the S&P. And it's a really great article, so I encourage you to look into this, but I don't want to read over all of it, right? They also talk about interest rates down here being the lowest basically they've ever been. So we're in historic times, guys, right? So, and I'm not going to go over this too much either. They're just talking about the different recessions, what happened to GDP, and these kinds of things. So take a look at this article, guys. They're saying that we're 100% entering a recession, right? So the next article I want to look at is about 150 years of oil price history, and one chart illustrates crude oil's spectacular plunge below $0 a barrel. So last Tuesday, the futures market brought oil down to negative $37 a barrel, right? Negative $37. Basically, you have to pay people to take the oil. And that's because of supply and demand, right? There's so much oil, and the economic activity is so low that the price is just going bonkers right now. So very interesting stuff. But I want to show you on this article here, they're talking about how it's unthinkable, the drop below $0. And it actually went down to negative 37, right? But the really cool thing, 37 here, right? But the really cool thing about this article is this chart, and it shows you since 1870, the cost of a barrel of oil in real dollar terms, right? So over the years, you see where it's been, where it's gone. And it's never done what it's doing right now before, okay? So demand destruction and supply is unprecedented right now, and we are in historic times. So this is very interesting to watch, and you can keep track of oil and really understand what the economy and the world is doing, because everything uses oil, right? Shipping, manufacturing, plastics, the semis bringing us groceries, people driving around, going to work. Oil is really connected to everything in the economy. So we can keep an eye on oil and understand what's happening in the world to some ways. Now, the other thing I wanted to show you today is a chart, right? This is a chart of the S&P 500, okay? Now this chart goes all the way back very far, right? Very far, 1870s. So what I wanted to show you guys with this is the Great Depression times, right? So during the Great Depression, this is what the S&P did in the market, right? So you see here, you have historic bull runs going into the Great Depression, and then what happens, okay? First we get a drop, right? And it's about a 33% drop, okay? And then what happens? Well, we got a dead cat bounce, right? And that was about 28%, right? So you get a drop, a bounce, and then a major drop, right? So from there, the price goes down 81%, right? And this is unprecedented before, and it's never happened again. But how long did it take to get back to the level it was before the big drop, right? Well, if we take this and we push it out here and we line it up, we see that it took 8,096 days to regain to the levels it once was, and that's over 20 years, right? So you can imagine if you're an investor here, maybe you're getting close to retirement, maybe you're 5 years out, and whoa, all of a sudden, the economy starts going into a downturn, and you lose your capital, you lose your retirement fund. And a lot of people had a lot of problems here, right? Great Depression. So this is just showing you how long and how drastic things can be, and really uncertain, and in bad times in the economy. So what I want to do now is go to our current environment, right? And I'm going to go back to candles instead of the line, so I can show you a little bit more accurately what's happening, right? So just like before, bull run, historic bull run, we get up to a top here. Well, what happens? Well, we drop 36%, okay? Big drop, right? Very similar to the other drop in the Great Depression. Then what happened? Well, we got our bounce, just like before. And how big was our bounce? Well, about 28%. So this is almost exactly what happened back in the Great Depression so far. Now, what happened after that is, very sad, and hopefully doesn't happen again, but prices go down 80%, right? So that's a big drop, way down here, right? So I just wanted to show you guys what that actually looks like in today's world, right? And coincidentally, there's actually a trend line down kind of in this area, right? These are trend lines that the markets like to bounce off of because these are supply lines of equity and liquidity. So, I'm not saying this is what's going to happen. This is not financial advice, but we're looking at possibilities, right? So when we look at possibilities, right, we need to dive into this a little bit further, right? I want to show you one more thing here. And this is how we think about the market here at Leading the Way, okay? So when you're looking at the market, only three things can happen. You're either going to go up, right? You might go sideways, okay? Or you go down. And those are really the only options here, right? Up, sideways, or down. So in a traditional market, right, we want to know what we should do in each of these possibilities. In the traditional market, we understand that growth is typical, and we allocate 60-40 in the typical retirement fund. 60% equities, 40% fixed income. Now, that's a great way to catch the gains on the market if we're going up. But what if we're going sideways? Maybe we allocate 50-50 or 60-40 equities, fixed income. But what happens if we drop, right? What happens if we're going into another Great Depression? Okay, well, it might be smart to put more of your capital into a fixed income. Take your 401k and put it into a money market account. Just like our legend, my grandpa, recommended to his daughter, Krista, and that saved her $70,000, right? So these have real implications in your life, and it's good to look at the possibilities, assign probabilities to those possibilities, and then you'll know how to act when things start happening, right? So before we leave today, I want to show you one more thing. I got to show you a Twitter video, right? So our Twitter video today it's going to tie everything together, right? So we're looking at the ocean, and we're looking at oil just sitting in the ocean because nobody wants to buy it, right? Have a look. Have a look here. Now, these are all oil tankers off the coast of LA, Southern California, sitting with millions of gallons of oil that they can't get rid of, right? There's just too much supply and there's not enough demand. So you're literally looking at why the market dropped to, negative $37 a barrel. It's historic drops, historic times. You got ships parked off the coast of California. And what are we telling you to do here? Well, we're just telling you to pay attention and start planning, because nobody knows what's going to happen next, right? Well, I hope this was helpful today. And until next time, my name is David, and this has been Leading the Way.